Hello and welcome to Deal Flow, the show that deals with the trends and intricacies of deal making on the African continent. I'm Erica van der Merwe. The global energy market has been full of surprises, fresh discoveries, technological shifts and regulatory interventions. After a year in which mergers and acquisitions activity in this sector moved down a notch, that's in 2013, deal activity is set for a return to an upward trend during 2014, and that's according to a newly released report from PwC. Well, we look this week at prospects for deal making in the global and regional energy sector. First up, the deals of the week.
Commodity trading houses, Glencore and Mercuria, are among the shortlisted consortiums expected to make final bids on Nigerian energy assets worth around $3 billion. Japanese e-commerce giant Rakuten, controlled by billionaire Hiroshi Mikitani, looked to buy call and messaging app provider Viber Media for $900 million in a deal that would more than double the number of users in its digital empire. COMCAST's proposed $45.2 billion takeover of Time Warner Cable could face close scrutiny from the United States antitrust regulators because of the deal's potential to reshape the country's pay TV and broadband markets. France's Danone is considering the sale of its tube feeding products unit, which could fetch over $4 billion as it expands its dairy business in higher growth emerging markets.
Weighing up global industry trends over the past year or so, it seems that the energy sector has had its share of interesting developments. New discoveries, shifting technologies, regulatory about turns and pricing swings have kept sector players on their toes. Now, according to a recent report from PwC, the value of global deal making in the power and renewables sector dropped by 1/10 in 2013. The firm expects a rising trend in 2014, though. We're talking to John Gibbs, Corporate Finance Partner at PwC, and Greg Knott, Director of the Energy Practice at Worksman's Attorneys. Really good having both of you here.
Thanks.
So John, starting with you. So if we were to just look globally, from sort of a superficial assessment of what's been happening in the sector, one of the highlights or trends is the discovery of natural gas and shale gas. And it seems to be, and excuse the horrible pun, shifting the balance of power in the sector.
Well, it's particularly shale gas in the United States, which has been a major game changer there, allowing them to achieve a degree of energy self-sufficiency that wasn't there before. What it's had, though, is a huge impact on the global markets, because instead of the US being an importer of LNG, natural gas, it's becoming a potential exporter of LNG derived from shale gas. And it's throwing in particular long-term pricing of gas into a state of some uncertainty.
Is that one of the reasons why, if we're looking at John's report from PwC, why we've seen a decline in deal-making activity, or are there many other drivers at foot, Greg?
No, there are many other drivers. I think just to have a look at our renewables, for instance, I think that incredibly increased number of deals over the last couple of years. We're now working into window 4 of the renewable deals. I think that's
so this is locally now in the South
African market. In terms of shale gas and gas, that really is next on the horizon. That's certainly something that South African investors are looking at, and not only in terms of shale gas, but also offshore oil and gas. Now that's going to be an interesting perspective as well.
John, looking at deal making in Africa, and you can guide me here, your report says that deal value trebled in 2013 in the African region. What's been the driver here? So we know there's privatization in Nigeria, there have been discoveries in East Africa of natural gas. Is that it, or is it the hunger for power from other regions?
Well, clearly the changes in Nigeria have been a major driver for M&A activity. Yeah. The privatization of the discos created a deal flow that wasn't there before. More generally, there's a real appetite for investment in the African continent. And we're seeing new players entering the market, particularly the Japanese trading houses, Chinese investors, and others from the Far East. And that's creating a desire to find assets, both greenfield assets for investing, but also brownfield assets to include in your portfolios.
Let's look a bit more at the nature of these deals, Greg, that we're seeing not only in South Africa, but in the West and East African regions. So John's referred to greenfields and brownfields developments. So a bit more your perspective on who the players are and the kind of deals and the size of these deals as well. Are these mega deals?
They are mega deals. I'll just give you one example, for instance, the Kariba North back in Sechin, There's a huge transaction in Zambia dealing with hydropower, and there China Exim Bank was involved. And that's hundreds and hundreds of millions of dollars. That's one example. In Ghana, for instance, in Tokoradi, in that particular area of Ghana, there too are significant deals being played out. You flip right to the east coast to Kenya, Tanzania, you mentioned the gas. We also mentioned renewables and wind farms being established in Kenya as well. So right across the length and breadth of our continent, you've got significant deals. Oh, and I think what we were just talking about, John and myself earlier, is that we see a momentum of closing these deals. Whereas in the past, they'd lumber along. I think there's more energy in actually trying to close these particular deals.
So what's changed? Is it because one of the counterparties is the state, and the state in these various markets are recognising the importance of this for driving growth?
I think availability of capital,
yes.
the uptick in terms of perception of Africa, what Africa is about as the last economic frontier, changing perceptions of Africa. I think that also certainly helps in terms of investors, and also the climate. Capital is very frightened both of regulatory and political sensitivities. And I think that's certainly changing, as I say, changing perceptions. More regulation, more environments which are investor friendly, for instance. And I think also the pragmatic approach of the East. For instance, your Chinese investors taking a more pragmatic look at our continent.
Mm-hmm. So John, clearly then, if you talk about the availability of capital, it does seem then that capital sees profitable opportunities here. Greg, referring to regulation, I'm assuming he means sensible regulation that we're seeing here. So is this generally true, or just some of the highlights that we do have?
Well, I think if you look at the South African market, there is no question that here we have specific advantages here. A very good, stable regulatory system, a large power system which can absorb new investment, and also a very well-established liquid financial market that allows us to do RAN-to-RAN transactions. So South Africa is a bit of a one-off. When we look at the broader continent, I think there is still a need for additional regulatory reform to really give investors confidence that change sticks.
What does that mean, regulatory reform? Are you talking about the offtake agreements of the state buying the power, or the tariff structures, or just the transparency and visibility?
It varies. In general, you need a well-run utility which is achieving cost recovery from its tariffs. So tariff reform really is at the heart of this. Then you need a regulator, preferably an independent regulator, who will ensure that tariffs are maintained at the appropriate level to achieve that cost recovery, or in the case of independent power projects, that those tariffs are allowed to escalate at the level that's allowed for in the contract, so that the investors and the banks can put their money in with certainty that that money will come out, providing the project works according to spec and so on.
So getting more specific, Greg, so John's referred to South Africa being a shining example of good regulatory reform. Where else are you seeing this, or it's at least emerging?
I think East Africa, certainly. If you look at Kenya, I think certainly it's met the market. It wants to do better in terms of investors. It's transparent, certainty. I think Kenya certainly is a shining light on East Africa. Again, going to West Africa, Ghana, for instance, also very suitable for investors. And you've seen the big investments being contemplated, particularly in oil, and also in renewables as well. So one can point to close to home, Namibia, for instance, good regulator there in the energy market, and I can give other fine examples. So we're not without examples on the continent.
And clearly the other country that we shouldn't ignore is Nigeria, which is going through a process of reform and putting in place the sort of structures which are required to stimulate very necessary investment there.
And then from an investor perspective, the story always goes that the smart money will go where others are fearful of going. So because you tend to have the first mover advantage and the profitability, and even in our own renewable energy program, that was true. I think the profits were far higher at the beginning. So presumably that also applies in the region.
It does. I mean, clearly, again, Nigeria is an exciting market where change is happening. And for investors who are willing to accept perhaps a slightly higher level of risk and uncertainty than would be the case here, it's a great place to be. But markets like Ghana and Kenya have a need for power and have already done what needs to be done to put in place those stable regulatory frameworks. So they're very attractive places to be looking at now, because there's a long-term pipeline and need for power, but well established and understood.
Greg, going back to the point you made at the beginning about, you said there's a whole gamut, a whole sort of continuum of kinds of deals, I'd imagine size, and you said the kinds of assets, whether it's water, natural gas and so on. Typically, how is this financed? Is it equity finance from say, off some corporate balance sheet? Is it bank funding? Is it a combination of that?
You get a hybrid, you get a mix. So you'll have institutional lenders, you'll have your institutions, your World Bank, for instance, and big projects like Kariba Bank, Chinese Exim Bank, another state institution body. You'll have private investors also, your private institutions, your banks and capital banks. So project finance is a very complex financing model. So there are many moving parts. And to that, you'll get a number of players who find interest in big particular projects, energy projects.
So drawing it all together, Greg, so where would you say are the prospects for energy and power, M&A, merger and acquisition activity on the African continent over the next year or two?
I like East Africa in terms of the gas, obviously. That's a cert. That's a good trend. That's where we're off to. We'll look out for our own developments in terms, as John said, in terms of our own RFPs coming out on base load and so on. That's going to generate a lot of excitement within our own market, especially on the back of the template of our renewable program, which has been successful. And then John's mentioned Nigeria. We've got to look at Nigeria. And again, Ghana, that particular part of Africa. So those are some of the trends.
Yes. And John, so your report expects an uptick in 2014.
We do, and I think that will continue. I think South Africa, in particular from an M&A perspective, the renewables program is going to throw up opportunities over the next few years as projects are commissioned. Because once you've got an operating project there, you have good, stable cash flows, which become very attractive to institutional investors. And providing that secondary market is allowed to evolve and develop, it can act as a new stimulus, but it both allows new money to come in from these more conservative investors, but also it frees up the money from banks and other primary investors to put into the new programs which are coming through. And there is a really exciting program of baseload and mid-merit IPPs which are going to be coming to market over the next couple of years in South Africa, effectively building on and extending on the success of the renewables program. The other country I'd just mention in passing, for perhaps albeit at a slightly higher risk perspective, is Zambia. Big plans
Greg
there
agrees.
for hydro, and also, and not just large-scale hydro as well. One area which we're going to see developing across the continent, mini hydro, distributed grid development, where you're looking at smaller scale projects, which require less capital investment, but may be very attractive for a different group of investors.
Well, gentlemen, thank you very much, John and Greg, for coming into the studio and sharing your expertise. Thanks to my guest, John Gibbs. He's from PwC. Greg Knott is from Worksman's Attorneys. For more deal-making news, do tune in same time next week. From me, Erica van der Merwitz. Goodbye.
Thanks, Eric.
Thank you very much.